Did you know that the financial system is like the nervous system of the economy? When money moves efficiently, businesses thrive, jobs grow, and wealth expands. But when financial markets freeze, like in 2008, the entire economy can grind to a halt. So how exactly does finance shape the broader economy? And why does it matter to you? Let's break it down. Imagine two people, Sophia and Jake. Sophia runs a small tech startup. She's got an amazing idea but needs capital to scale. Jake, on the other hand, has been saving and wants his money to grow. When Jake invests in the stock market, his capital flows into companies like Sophia's, allowing them to innovate, hire workers, and contribute to economic growth. That's the core of financial economics, connecting savings with investment to drive productivity. But there's more to the story. The Federal Reserve, for example, influences interest rates, which affect borrowing costs for businesses and individuals alike. Lower rates mean cheaper mortgages, more home purchases, and a surge in real estate jobs. Higher rates? They cool spending and tame inflation. It's a delicate balancing act that shapes everything from your paycheck to the price of your morning coffee. Speaking of inflation, let's talk purchasing power. When central banks flood the economy with money, too much cash chases too few goods, driving up prices. This is where financial policy and real-world economics collide. Just look at the aftermath of pandemic stimulus packages. Massive liquidity injections fueled inflation, forcing central banks to slam the brakes with aggressive rate hikes. Now let's zoom in on financial markets. Stock markets don't just reflect economic health, they can predict it. When investors are optimistic, markets surge, encouraging businesses to expand. But if markets crash, consumer confidence crumbles, spending tightens, and businesses pull back. This self-reinforcing cycle is why Wall Street fluctuations ripple into Main Street realities. Debt markets play a huge role too. Governments issue bonds to fund infrastructure, social programs, and defense. If borrowing costs spike like they did in 2023, interest payments skyrocket, straining budgets and triggering spending cuts. That's why national debt levels aren't just numbers. They shape economic policy, tax burdens, and even global trade dynamics. Let's make this practical. Understanding financial economics isn't just for economists. It affects your investments, retirement plans, and career choices. If you're a homeowner, interest rates dictate your mortgage payments. If you're an investor, knowing market cycles can help you navigate risk. Even your paycheck's value depends on wage growth versus inflation. So here's a question for you. How do you see finance shaping your daily life? Drop a comment. I'd love to hear your perspective. And if you want to sharpen your financial edge, stay tuned. Because what's coming next will change the way you think about money forever.